Hey, this is Justin with Day Trade the Markets on Friday, December 28th, and wanted to do a video tonight and just talk about kind of a picture-perfect confluence, what we call a confluence trade, and really break down what that idea means ahead of this nice 20-25 point sell-off at the end of the day. So I wanted to talk about that. Now, full disclosure, I did not catch this move. I usually like to talk about things that I take part in. I cut out a little bit early today and had some family time. So I'm a little disappointed that I missed that, but you can't hit them all. But the education behind it and the logic behind it, I still think it certainly applies, even though I didn't personally catch that. You can still learn from it. So I thought I would break it down and show you what happened today. So again, this is typically the week between Christmas and New Year's is usually pretty quiet. This year with the political news, the fiscal cliff stuff, there's been a lot of activity. So I imagine more people were trading today or on Friday than normal this time of year. So let me talk about this idea of confluence real quick and talk about how to make sense of what we're looking at here. And to do that, give you a little bit of a background here. The idea with what we teach and how we look at the market is that we believe that essentially, if you're as a trader, you're essentially a professional decision maker, and the better you can get at understanding what's going on in the market and making quality decisions time and time again, in other words, taking the evidence that you have in front of you that you look at and using that evidence to make the best possible decision at any given moment, the better decision maker you become, the better your results are going to be. And so one of the concepts that we like to talk about is this idea of confluence, and the idea here is that we have various pieces of really unique order flow market data based evidence that's going to help you see the market more clearly. And you have a situation where 2, 3, 4, 5 of those things come together. It's going to give you it's what we call confluence. It's like, the movie The Perfect Storm, where there's a confluence of events to create this perfect storm. It's the same idea, where if you can get many of these pieces of evidence to come together, you've got an increased edge. Doesn't mean it's always going to work out, but that's the idea. If you can have 3 or 4 of these pieces of evidence that come together, you have a high edge. Okay, so let's look at today and kind of check it off in terms of what the evidence was telling us at a few different decision points throughout the day. So what we're looking at here is just a 1-minute chart of the E-mini S&P. You can use this on any time frame you want. I'm just happen to be looking at the 1-minute chart. It's one of the charts that I like to look at. And what I've done is I've written these different ideas here just for easy reference. And so what I wanted to do is kind of go through the day kind of step by step and talk about a few different decision points and kind of break down what the evidence was telling us. So to do that, let's talk about our bigger picture bias and bigger picture key levels. And each night in our member center, we do a very detailed report on what's been going on in the market over the past few days, few weeks, kind of giving us the bigger picture lay of the land, the 30,000 foot view as opposed to the street level view. Okay, and so heading into today, our bias was leaning up, but it was certainly weakening, and we wanted to really key in on this 0575 area right in there, with the idea that if the market could trade below there for 45 consecutive minutes, our bias would be shifting to the downside. Okay, so that was kind of our line in the sand, heading into today with a weakening up bias, but knowing that this 0575 area was really key and we wanted to monitor that. So with that said, now let's start to focus in on the intraday evidence and what that's telling us. And one of the things that we like to do is focus on the first, what we call major piece of evidence each day. By major, I mean a level 2 or a strong buying or selling aggression bar, or what we call level 3 extreme buying or selling aggression bar. The first one of those that we had was this level 2 selling bar that came in 45 minutes into the session or so. And we like to ask ourselves, do we get follow through or a continuation, or do we get rejection? And in this case, you can see we took out the low by a tick, but we didn't have a full bar below. It even decelerated right there, and then took out the high, full bar above. So that's telling us structure-wise that at least in the short term, bulls are in control of this market. And so we do have a potential, what we call confluence type of a point right here. And so I wanted to kind of break that down piece by piece and talk about the different pieces of evidence here. And so if you were looking to get long in this area right in here, let's talk about what the evidence is telling us. So bigger picture bias, is that with us? Yes, it is, but it certainly is weakening, and we haven't traded 45 consecutive minutes, but it's been pretty close. So I would put this as certainly a neutral. You could even put that as a negative if you wanted. Now, bigger picture key levels. Now, if you got long in here around 03, you've got 2.5, 3 points to move before you hit the 0575 area, but it's certainly not being helped by a bigger picture key level. It's more trading into that level. So I'd put that as a negative. Now, do we have structure? Well, yes, the main structure we've had so far we've rejected, so that certainly would be in our favor. So I'd put that as a plus. Okay? Now, do we have a support resistance zone? Yes, it's this green zone right here. So that should act as support right in here when the market tests there. So that's a plus, okay? Is our filter with us? Yes, if we're getting long, we have a green filter down here. So that's a plus. And if you're looking for a little extra confirmation, do we have a deceleration or a divergence? We actually have one right in there as well. So you could say that's a plus as well. So in this case, we've got 4 pluses, so +4, a minus right there, so it's +3, and that's about a neutral, I would say, on the bigger picture bias. So it's +3. If you're really conservative, it's a +2. Okay, certainly a bit of an edge if you were going to get long here. It's not the perfect trade, but a bit of an edge. And you can see the market did rally some 6-7 points off of there. And then we had this level 3 buying aggression bar that came in on the high of the day at that time, followed by another one. So kind of a wave of buying right in here. And so with that said, we have another idea here. We know that if a wave of buying is started with a level 3 bar, the low of that should act as some support. And so we have another opportunity potentially to get long somewhere in this area here. And this also happens to be a support zone. So let's again kind of break this down piece by piece and talk about this idea of confluence and look at how many pieces of evidence have come together. So is it with our bigger picture bias? I'm going to say that's neutral. I'm not going to really count that as with. I'm not going to really count it against. We're kind of in a mixed situation. The market's really testing this 0575 area. Bigger picture key level, I think you could put that as a plus. If you're trying to get long on this 0575 area, somewhere right in here, certainly it makes sense. It's not hurting us. Do we have structure? Yes. The low of this level 3 bar should act as support. That's one of our main things that we teach. So that's a plus. Do we have a support resistance zone? Yes, we do. This green zone right in here is support zone. So that's a plus. Do we have the filter? Yes, we do. It's green, although it may have switched right at this point, but we'll count that as a plus. And then do we have deceleration or divergence? Yes, if you're looking for extra confirmation, we have some deceleration right in here, in there. You could look at that as an extra piece of evidence. So again, you've got, plus, depending on how conservative or aggressive you want to be with your scoring, so to speak, you've got a +3, +4 situation at worst. Certainly is a good edge trade. Does it mean it's going to be a great trade? Not necessarily, but it means it's a pretty safe trade getting long in here. And, it rallied some 4 points. And if you can take 2 of those 4 points, certainly not bad. I mean, that's something that it's not going to hurt you. It's a decent trade. It's a high edge, high probability trade. Okay? So that's an idea where it wasn't a perfect trade, but certainly more pluses than minuses, if you will. Okay? So now I want to talk more about this late day situation. And again, I wasn't able to capture this, but the logic still applies. So there's our 0575 area line right there. And you can see that at this time, right around 2 o'clock Eastern, and we had the filter had gone neutral right around 11:30. So 1 hour, 2.5 hours or so was pretty choppy, and you can see, or pretty neutral, and you can see the market was pretty choppy. It wasn't until we pierced below this 0575 area, we had this level 2 bar. We tested the high of that, decelerated, sold off some more with this level 3 bar, and you can see at this time, even though the market hasn't sold off tremendously, the filter down here is showing us that some negative order flow is coming into the market. So again, we're leaning down. Then you can see starting at around 2 o'clock, a little before, all the way to about 3:30 Eastern, so certainly longer than 45 minutes, we're trading below that 0575 area. So our bias is certainly shifting to the downside. Again, our filter has gone dark red, and so we want to ask ourselves, getting short somewhere in this area, does it make sense? And so let's kind of check that off piece by piece. Okay, do we have the bigger picture bias? I would say so, certainly right around in here, because this is our line in the sand. We've traded below this for well over an hour, so that's certainly a plus. Not a huge plus, but it's certainly a plus. The bigger picture bias is definitely leaning down. If we were to get short around this 0575 area in one of these 2 red zones, is the bigger picture level helping us or hurting us? Well, it certainly is helping us. That 0575 area should act as resistance. Do we have any structure? Is there any intraday aggression or high velocity moves that are helping us? Certainly, we've got this level 2 bar and then especially this level 3 bar, which the high of that should act as resistance. Okay, so structure is certainly in our favor. That's a plus. Do we have a support resistance zone? Yes, we have these red zones here and then this shifted up a half point or so right here. We have this support resistance zone right in there. That's a plus. Do we have the filter? Yes, we do. In fact, it's dark red for the majority of the time, so that is certainly a plus. So, red filter when you're thinking about getting short certainly is a plus. If you're looking for extra confirmation, do we have deceleration or divergence? Yes, in fact, we have a few deceleration bars right there, right where we're looking to potentially get short. So that is also a plus. So let's add these up. 1, 2, 3, 4, 5, 6 pieces of evidence in our favor, nothing against. So that's kind of a picture perfect or a textbook confluence situation. Okay, now does that mean that it's going to work every time? No, this market could have rallied. Does it mean it's always going to sell off 25 points right after that? No, it doesn't mean that. But what it does tell you is that it's a very high probability, very low risk way to get into the market. You're looking at evidence, trying to make the best decision you can, and the evidence is telling us this is a pretty good place to be getting short. Unfortunately, I personally missed it, but if I would have been here, that's what it would have been telling me. Okay, that's kind of a textbook type of an idea that it's pretty clear. Everything that we look at in terms of this software is telling us this is a good situation. And again, is it going to always sell off 25 points? No, of course it's not going to. But it's a situation where 7, 8, 9, 9.5 out of 10 times, it's going to be a good trade. It's a high probability, high edge type of a situation. So hopefully that makes sense. And you can see that the market then really kicked off, and we had a level 3 selling bar, level 2 selling bar, another level 3 selling bar, tested right to the high of that. Another level 3 selling bar, tested right to the high of that. This level 3 selling bar got rejected, and we had a little bit of buying aggression that came in. So getting out right in here, if you're a little bit, if you like to lock in as much as possible, certainly makes sense. But still, you lock in 6 to 8 points in there. That can certainly make sense. If you had a little bit more patience with it, certainly you can lock in some more and get out right at the end of the day. But certainly the point I'm trying to make is just try to explain this idea of confluence, or this idea of taking different pieces of evidence and kind of adding them up. The pros, the cons. You can be as mechanical as you want about that, but the idea is what's the market telling us? What's the evidence telling us? And then putting that together to make the best possible decision, having the patience to wait for those situations. So hopefully that made sense. In terms of heading into Monday, I believe it's a shortened day on Monday, on New Year's Eve day. Normally this would be a big nothing type of a day, but overnight Sunday and into Monday, this could be very active. So certainly want to be on guard if you are trading on this day, just because of the political news. Otherwise, if we don't talk on Monday, hopefully everyone has a great New Year's and stay safe, and we'll talk soon. Looking forward to a great 2013. Hopefully everyone is as well. All right, talk to you later. Thanks.